All right, guys, what's going on? Good afternoon, good evening, all. Thanks for taking the time out of your day to join me this afternoon and every afternoon after the market closes for the week. My name is Carlos Garcia, your host for this week's market recap. We're going to recap our trades on the option side, talk about the market, preview next week, and talk about a couple of stocks that I'm watching too. As you know, weekends are for the watch lists. So I'll put a couple of names, 3 names on the blog this week for free for everybody. If anyone's interested, join the blog. And going to be some good setups there. Speaking of which, in order to just get started, here are the names that I put on the list this week. Where can I find it? Let's see. I know Bank of America was up there. Nope. Let's see. I know I had it here on the watch list and charts on the blog. Here we go. Here is it. Or here it is. Excuse me. I can find it. Here we go. Quick watch list. The 3 stocks with alerts that I'm watching this week to trade: CVX, 160.95 target, 166 calls, 162 to 166 calls, gap to fill 166.24. Bank of America above 32.12 target, 33.34. And then AMC, if it broke above 886, it never did. But these 2 we did trade. So if you guys were on the blog, you probably caught that. So well done on that. So again, I'm going to send out another 3 on the server. And if you haven't joined already, make sure to join our website, www.gar.capital. There is no .com at the end. We will post the quick watch list with the 3 stocks and alerts on Sunday for y'all. No charts, again, just the information, and you do with it what you wish. Let's go ahead and talk about it today. Nice bounce in the market, very resilient market. Dow Jones up 176, the NASDAQ 266 up 1.9%, S&P closed up 1%, 45.82. One streak ends, one begins. Now we got a green Dow day. So we stopped at 13. We are now at 1, starting at 1. Volatility index 1333. I talked about that on the blog as well, that Fridays tend to be a big smash program of some kind. Smash down 7.5%. The US dollar fell 0.07%, 101.70. So we can't put all the credit on the dollar giving us the boost today. 10-year treasury yield 3.969. That's a good sign, about 43 basis points to the downside for the 10-year yield. What stood out to me, and the expectation I had, and I said this on the blog too, is that I knew we were going to bounce because of the fact that we had very much spiked on put-call ratios. Put-call ratios yesterday were at its highest point all month. So we looked at that and we saw, wow, a lot of people are buying puts on a very, very small dip where nothing has broken. Someone's going to get pretty much hit with a short squeeze. And that's exactly what we did, pretty much. So looking for the week, we'll go ahead and bring up Koifin. I'll go ahead and bring this up. Bear with me a second, guys. Koifin, did I put the app up? Here we go, today's markets. This is only going to give me the week, that's what I want. So again, we're going to go and look at the 5 days, see what led the way. The NASDAQ gained this week 2.11%, small caps 1.01%, the S&P up 1.01%, and the Dow up 0.66 for the past 5 days. That was the week. If we look at year to date, how much the S&P is up, S&P is up 19.34%. We're about 4.5% away from all-time highs. NASDAQ up 43.98% year to date. IWM, which is small caps, up 13.39%, and the Dow up 6.98% for the year to date. If we did a rolling 1 year, past 52 weeks, again, from back on July 2022 on to July 2023, the NASDAQ's up 25%, the S&P up 13.89%, the Dow is up 10%, and the small caps IWM up 8.65%. Not bad. If we stretch it out and include all the big drop of 2022 and we go ahead and talk about COVID, the NASDAQ is up 47.65% in the past 3 years. S&P up 41.45% the past 3 years. IWM up 38% the past 3 years. And Dow is up 33% the past 3 years. Or you can just own T-bills making about 4 to 5%. Guys, it's not about time in the market. Unless you're a trader, fine. But is time in the market is above timing the market. If you're going to invest in stocks and you don't need the money, pretend it doesn't exist, because you're going to have ups and downs all the time. That's just the easiest way to make money, is to invest early and invest often. As you can see in the past 3 years, how we got the bounce in 2022, and we're in 2023, new bull market. Wow, things do change rather quickly. So that's where we are in terms of the market. Let's go to S&P 500 rather quickly before we start recapping the week. Let's go and take a look here, about 46.26. That's kind of the zone we were talking about. We're going to chop around the zone. So far, so good. Again, we're looking for 46.71 as our next target, and then it's onward and upward to 4,700. Remember when 4,600 was a big line? Oh my God, we'll never break it. Next will be 4,700, and once we get to 4,700, everyone's going to say, there's no way we're going to get to 4,800. No way possible. We'll break that, and there's no way the S&P will get to 4,900 or 5,000. No way. We're going to tank. We're going to tank, and we still have those bears out there. How much pain does a bear need before they throw in the towel? When did the bulls throw in the towel? Right here, August of 2022. Jackson Hole Symposium, which we're going to get in August again. We were about to tap that trend line. We were about to be above the 200-day, and we fell rather quickly. 4,300 to 3,500. About 700 points. Is that possible again? Possibly, but not likely. The point of this exercise is to show you that at this time, even bulls, I was not including this. I knew this was a bear market rally. I even talked about that on YouTube. I thought we would get the bounce in April. We did not. But August, I knew that was not a pivot. They thought there was going to be a pause. It wasn't. So what happened? We had a bear market rally, and everyone got caught. Inversely, that this time the bulls were buying, and they got hit pretty hard. And this is where they gave up. Right here where it says, that's it, we're giving up. Everybody like Morgan Stanley and all these other banks were saying that we're going to fall, we're going to get to 3,000, base case 3,000 on Morgan Stanley. Were they wrong? Yes, because we bounced. And now we did bounce. We broke above the key level of 4,200, which is a 20% move from the bottom. That is a bull market. How much have we gone up since then? Another 400 points. It's pretty much the same deal. Think of the individuals like the bears, just like the bulls last year. The bulls last year thought this was it. Wow, we good. August, we're fine. Rug pull. You're going to get some kind of pullback, of course. The bears are going to try to pounce, just like they did yesterday, and then they're going to get railed, just like the bulls got railed in August 2022. So don't be surprised we get a pullback in August to lure those bears in, and then it's going to get bought again. It's going to be a short squeeze because everyone is so caught up in shorting in the immediate sense of a drop. We didn't break anything, and everyone was shorting. Sure, we shorted Microsoft, the 50-day moving average, but it bounced from there too. But S&P, nothing has broken. We're still within the range. We broke to the upside of 46.34, and we pulled back. So no real change there. Except you have a lot of people that are still looking for the crash. That seems to be always 1 month away. Next month, we'll get the crash. Next month is the recession, and it hasn't happened. Yes, even bears can have their own deniability. Bears are no different from bulls. It's just a side. So let's go to the NASDAQ rather quickly. Tapped 15.9. That was the level I was looking for. I got stopped out yesterday, flat stop. Talked about that on the morning note, but we did get S&P with the core PCE number. So again, we were long, but we got stopped out on break even on NASDAQ. Once we break 15.9, we're looking for 16,000. Once you break 16,000, all bets are off. And why do I say that? Because 16,000 is the 52-week high. And once we break that, you are only 767 points away from all-time highs. Incredible, incredible. Same deal in August. The NASDAQ popped higher, and then everyone started buying in the rip pull. So what I expect is the inverse. We're going to get a pullback of some kind. Yes, pick a reason. And then we're going to tag either the 50-day at 14,947. Everyone's going to short and then whoop, go higher, which is absolutely normal and needed. So I do read a lot of different magazines, Wall Street Journal, Barron's, MarketWatch. I'm always reading every single day. And the one thing I noticed is that the bears have not capitulated. That's what it's called. They haven't capitulated yet. They haven't thrown in the towel, just like the bulls threw in the towel in August and October, where they just gave up. We haven't had that big boost up yet, the way like that. We haven't had a eccentric squeeze higher, like a Dow 800, a Dow 1000 day, or we get a nasty short squeeze. We need that. We need the bears to capitulate. That's when you know you've hit a top of some kind. What level does that seem like it's going to be possible? At this point, even all-time highs, I think people are ready to short. I think the pain level is 5,000. Once you hit 5,000, I think everyone is going to be throwing their hands up and say, that's it, we're going to soar forever, and that's when you're selling. Probably. You're going to do the opposite there, and you're going to start taking some profits. That's pretty much it. That's pretty much the game plan. You know, you have an election next year. Who knows how volatile that's going to get. Things can change rather quickly. 5,000 S&P. That's my target, and I think that's where we're going to go. And I think that's where the bears are going to just throw in the towel and say enough. When your Uber driver or your neighbor that doesn't know anything about stocks starts telling you that we're in a bull market and starts getting excited and greedy about different stocks, that's usually a sign of being too eccentric a little bit. If you have people still talking about recession today and the economy's bad and we're going to crash, you're going to go higher. Pretty much. So if you still have friends like that that are telling the economy's bad, even with all the data telling you otherwise, GDP, unemployment, inflation falling down, commodity prices bouncing a little bit, stock market's near all-time highs. If anyone's telling you there's a bad economy, that means they themselves have bad economy. But in the collective sense, things are pretty good, as we can see in terms of the consumer confidence that we just had this week that beat on both sides. So use that as your tell. If you have any friends that are not into the stock market and they start telling you things are still bad, we still got more to go. If they start saying things are good and they're starting to get greedy, and you start, seeing NFTs pop up again, that's your cue when things are probably looking bad. So we'll move on with that. Back to the week, mixed week. Interesting enough, when 5 out of 8 this week, I still have a trade open. I have Google open. Robinhood and Apple were for last week. So just a heads up. I mean, it had a carryover. That's an L. But in terms of the week, JP Morgan we hit, Chevron we hit, Alibaba we hit. So Bank of America we didn't hit, my apologies. But JP Morgan we did. So Chevron and Alibaba and JP Morgan, the three are the ones we got. So, and also we throw in Boeing, I believe that was 2 days ago, and Microsoft. UPS was actually green, 41%. I just didn't get a chance to type that up. We're going to go over each trade together and see what we got right and what we got wrong. So with that being said, let's go ahead and start with Robinhood from last week. Let me go ahead and move this over. Okay, Robinhood. All right, team. So if you are on the Discord server, you can track along with me. We got in on July 19th. If memory serves me right, or actually my calendar serves me right, or my almanac, that was Wednesday of last week. This is Wednesday of this week, Wednesday of last week. This is where we got the pop, right? We're going to break out, all good, right? If we bring up a 4-hour, you can see based on the 19th, right here, we were just playing the pop. And then we pulled back and chopped and chopped and chopped and chopped. And we bought time. We bought it for next week, just in case. And all we did, guys, is just get chopped. Nothing really broke. Yeah, that yellow line did break, but we bounced above it. And let's take a look at the daily. If you see it here, it's still a breakout above. We just got chopped. That's all. We had the 14 calls. The target really was this. The target was right here, 1526. The good news is that Robinhood does report next week. So maybe we do get there. We're just a little early, unfortunately. So we just got chopped to hell, the worst thing. So that was the week before. Apple. Now this one is frustrating because we got Apple last week. And that was on the 20th. And that is a Thursday of last week. So here's Thursday. We got the pop here where we're looking for continuation to 200. Again, ignore all of this. And then what happens? We slide, chop, chop, push. Again, this is Thursday, Friday, Monday, Tuesday, Wednesday. Really until Thursday, we got that pop thinking that we're going to catch it, continue higher, we get to 200, and then we had the pullback. Remember when we had the tough week about 3 weeks ago and I was talking about resiliency and I can't wait to get back? Very similar stuff on that Thursday where we pulled back and then Friday we bounced. So again, 185.89. Apple reports next week, guys. I like Apple to the upside. If we break 197.25, we get to ride the upside into the earnings. We'll let the runners do the job if we soar So I'm watching Apple extremely closely. I did not fill yet because I'm waiting for that break of 197.25. We just got chopped and we were a little too far out of the money. Very unfortunate. We got to make it back. There's no excuse. Next one is JPM. JPM we filled on the 20th as well. That was a Thursday of last week right here. Fell, and then Monday, nice boost in banks. We got in, we got out. We got the 160 calls. We never got in the money, and then what happened? We just chopped around. So we got out perfectly at 158.79. We got 36%. Those calls hit as high as 80% on Chevron. The next one, CVX. Again, this was part of the market blog where I told everyone where we broke the alert. We filled that on the 28th, on the 24th. So that was on Monday of this week. So let's go ahead and see it. So Monday of this week, we filled it, and then we continued higher to 164. Why did I pick the 164 strike? Because of the gap fill that is coming up here, and that has not happened as of yet. 166.30, very similar to Square. If anyone remembers that we played Square, which was tons of bags. If we break above 164.04, we're going to go ahead and play the gap fill again to 165 to 166. So again, this may be the trade that keeps on giving. We got out same day on Monday. Well done. We got 37%. It got as high as 120% as we got to 164. We break it again. We'll go ahead and trade it again. Alibaba, a lesson in patience, because we talked about this one too. I even put it on the blog. Baba had the 100 strike with a ton of volume. If you traded it for this week, like the way we did on the 24th of July, which was Monday, here's exactly what we got. Monday boost, breaking out. Yes, above the yellow line. What happened? Boost in the morning, sell in the morning. Boost again, got a little higher Thursday, and then we had the fall. And then Friday, we finally got the price action we wanted, the breakout that we wanted. Again, at 101.2 in the money. How wonderful. We got in the money, and you can see it's a beautiful breakout. The next target is 103.50. We break that. There is a gap to fill here at 107.76 and another one at 116.80. I think Baba, unfortunately, is just a pain in the ass to trade, but the chart is there ready to go. We were down as much as 87% on Alibaba. It came back today in the money. We got 12%, but it got as high as, I think, like 18% or so in the money. We were just early. We got chopped. We were just early. I'm just glad that we got something and salvaged at least some positive. This one was the toughest trade of the week. Here it is. UPS. We got wicked. Here's the problem. I was 41%. We had it typed up. I didn't press enter, and we missed it. We pulled back immediately. This was the headline for the unions and UPS, the Teamsters Union, getting the deal together. I think that we're going to get this gap to fill, but we got reversed on, bounced off the 20, chopped away. End of discussion. We had it. We had it in our hands, and we got hit, unfortunately. You can see it. 41%. Didn't get a chance to close. Very, very unfortunate on UPS. And that's just something that we got to live with. Probably name I'm not going to trade again for a while. I'm kind of pissed off about it. But the good news is I got some DMs from you guys saying that you guys actually got it for 30% and you guys were quicker than I. It's not easy to trade and let everyone else know when to close. But I think that's what makes our business so unique, is that we put our clients first. Letting people know is important. We told you guys it was 30% on UPS. Yes, you probably waited for 40. But lately, if you noticed, we were taking it rather quickly, 36, 37, 33, 35. So, you don't have to wait for us to let you know when to close, guys. You can do it yourself. That's kind of the idea. But we will definitely let you guys know. Boeing, I got it for 33% because I even said I didn't want the same mistake as UPS. We got to learn from it. UPS, 26% at 11:52 a.m. Let us chart it. Here we go to the 5-minute. This was on Monday. Let's take a look at the times. Right here, 11:55 in the morning, 192.98. 11:52 in the morning, it was sent. 11:57, we were 26%, and at 12:15, it fell. 12:15. We fell, and then we bounced. 12:15, and we missed it. That's unfortunate. That was a big move. So that's just something that you have to learn from. I'm not happy about it, but that's just the reality of it. It's still a loss on my end. I mean, I even sent out the screenshots of my losses. Yes, it's important to be transparent. This is not easy. Here you go. UPS, minus 99%, $510 loss. How about Apple, minus 480? How about Robinhood, minus 96? That sucks. That's just the reality. We just got to eat it. And two of those trades, guys, were from last week carryover. We bought time and everything. It just get chopped. And Baba in the money. We waited. We wish we could have got more. And UPS, we just got reversed on. That's just terrible because we had it. So really, in reality, if you think about it, I'm breaking it down. We were undefeated this week if UPS was closed. That would have been 6 for 6 as I wanted this week. That was my target. With the two carryovers, we'd be 6 for 8. Seems about right. What we did this week really was get a trade every day, which is kind of nice. That's kind of what we want. But again, it's the carryover. I know. But guys, if you have something there and it's going to push, you just can't sit on your hands either. So to be completely honest with you guys, in terms as a signal provider, we hit our target in terms of last week. So if I just close GAR Capital and say, we're not trading anymore, too bad, you have to eat it, that wouldn't be fun for everybody. We're going to look for opportunities for everybody. That's where the customer, the client, really makes the decisions on his own. And he says, you know what, did I hit my target for the week? Did I hit my target for the month? I'm just going to take a chill break, and you already made your money. So that's where we are on that end. If we break it down in terms of how much money, win-loss, based on $500, we were down $735 this week, not counting runners. Runners on Boeing got to 50%. Runner on CVX got to 120. JP Morgan got to 80. So not tons of runners. But if we break it down in terms of the month, we're still up about $1,300, $1,338. So again, if you're trading exactly the way we do with the exact position size and you're paying $200 a month for premium, you're pretty much up $1,100. Not bad at all. And remember, that doesn't include Forex. That doesn't include futures. Nick will get the futures video out to you and recap the week. But in terms of options, this is what we got. We just got to get better. Simple as that. Just got to get better. We got to add 3 losses to this. So I have to do the math here on the month. Let me see. 1, 2, 3, 4, 5, 6, 7 losses this month. When did I stop? So 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 31, 32. 33, 34, 35, 36, 37. No, not 37. So we got 37 to 3, 34. We had 5 trades. I think that's about right. We had about 7 losses and 34 or so. Yeah, so 28 out of 34 or so. I think that's the number. 28 out of 34. 7 of them were losses. Be 27 out of 34. I don't know if that's the exact figure. Let's see, 27 out of 34. That gets us to around 80%. That might not be accurate, but I'm going to make sure. Or I'd have to count it myself on that. So you take away 3 and 37, that's 34. And then take away 7, yeah, 27, 30, 34, 80% win-loss. That's pretty much on par for the course of about 1338. And guess what? We're going to come back stronger on Monday, make up for that, and do it again. Back at zero. That's kind of the idea every single week, just back at zero. So we do have some earnings coming up this week, as we know. Let me see if I can get that for you. What comes up is on our earnings calendar. Here we go. So Monday we have SoFi. AMD is on Tuesday after the bell. Pinterest as well. CVS on Wednesday in the morning. Qualcomm on Wednesday, after the bell. Shopify, PayPal. Robinhood also, we try to trade Robinhood fastly. Apple and Amazon is on Thursday, the big ones. DraftKings, I'm watching that very closely. Coinbase is there too. So a couple of names I'm going to be watching this week. I wrote them down, but again, let's go over them together if you got some time. First one I have on here is Qualcomm. Qualcomm does report this week. So Qualcomm broke. I had a couple of members ask me, hey, I'm looking at Qualcomm. Should I stay in? I have the 130s for like 2 weeks away. I told him to hold it. It's going to get to 130. You take your money and you move on. So I hope he caught that. He is in masterclass. In terms of Qualcomm, beautiful price action, getting a breakout here, kind of an inverse head and shoulders. I think we target 140 moving forward. what do we want to break in order to get to that level? We want to get above 130. So if we get above 130, we'll take a look at the 131 to 135, maybe the 140 call strike. 140 seems a little bit off, so I would say about 135 to 133. Call strike for Qualcomm, that gets us to right around here, 133.37. That'll be our target. We're above major moving averages. We have not golden crossed yet, but we're above the 20. I like Qualcomm. I think Qualcomm beats and continues higher. We had Samsung report higher demand in smartphones. That's Qualcomm's bread and butter. And Intel, being literally the laggard of the semiconductors, actually having a positive EPS report. That's a really good sign. I like Qualcomm. I think we break it. 130.02, get to 133.37. That's what I'm looking for. Let's take a look at Apple. Apple, because of earnings. And again, we went over this again. Try the 200s. Get above 157.20, 197.25. I'm looking for the 200 calls. Very, very simple. I think Apple continues to run. And it is going to break out, in my opinion, based on their earnings. They'll run up into earnings. You may slide after earnings. But again, you may get bounced afterwards. But the idea is if we get into Apple, we want to get the hell out before earnings on Thursday. And then we would go ahead and let the runners do the job. DraftKings as well, another one that's breaking out, 32.82 now. Taking a look at it here, really the next level is the 50% retracement, right around 37.38. So we're getting a break. What we want to do is see if we can get above this wick here. There is a candle settlement on the daily right around 33.42. If that breaks, we'll take a look at the 35 to 37 call strikes for DraftKings. Earnings are a catalyst. What we want to do is play the run up into earnings with volume. Earnings on DraftKings is on Thursday, just like Apple. So time will be at least a little bit on our side. Let's go to Roku. Roku had a hell of a day, so I just want to take a look at it. Getting a beautiful breakout. And what we want to do is target 100. So if we do target 100, we know the round number theory. What exactly is the level that we are looking for to get there? Let's do 190, 191. You can see that is where our candle settled here on the hourly on the 5th of July of last year. Again, breakout on the daily, and we got a lot to make up. A lot of gaps too. There's one right here, and that gap is right around 269.51. So seems like a long way away, right? Well, people said the same about Netflix and Meta. So gaps do tend to fill. Palantir too. So we'll see if maybe Roku gets us a shot to trade at 100 on this stock. And I think that's all I got. I think Intel was one more. I think I talked about it this morning. We want to break up 37.62. There is a gap to fill at 39. So that's exactly what we're going to target. Once we break 37.62, we can target 38s or the 39s on Intel. So I got Qualcomm, Intel, DraftKings, Roku, and Apple. I'll type 3 of those for the blog so you guys can know what's coming up next. We'll finish it off today with Forex Factory. Forex Factory is going to give us the economic data for the upcoming week. And here it is. ISM manufacturing PMI, JOLTS job openings, ADP non-farm employment change. That's the private payrolls. NFP doesn't really come close to that anymore. ISM services PMI, unemployment claims, OPEC meetings as well on Thursday. Average hourly earnings, non-farm payroll on Friday, unemployment rate. So another NFP day. Expectation is 200,000 new jobs added. And OPEC meetings on Thursday. That means we got to keep an eye on crude oil. The last one for the road, my future guys. We're waiting for $80.81. We'll target $83.42 for the next upside move. But the real move, if we're expecting higher oil prices, is right around $85.28. This is inflationary, so be careful. It is about the dollar. If the dollar continues to slide, crude oil is going to go higher. That's the expectation. And you are all wrapped up for the week. Thank you guys so much for joining me this evening. And I will see you guys on Monday for the next morning note. Have a great rest of your weekend. Be safe. We got race week over in Spa in Belgium. Let's make sure that Lewis Hamilton and Mercedes can pull it out. But more than likely, it's going to be Max Verstappen. Have a great rest of your weekend, guys. Cheers.